All right, let's get started here. Where we left off before we broke for the changing of the tapes here, where we were going over the squeeze, how it works, what's the mechanics of it, and how I trade it. So we're just going to continue from there. Time frames alike. Now, there's another way you can use a neat feature in TradeStation, which is the radar screen. It is an extra fee for radar screen. Radar screen works like a real-time Excel spreadsheet, but every column, or is it column or row? Every row is actually a live dynamic chart thing. So you can put as many indicators in that thing as you want. So what I do on the squeeze, because I've got one TradeStation workspace that it took me like 18 hours to build. If you guys want it, I'll download it and give it to you guys. It's just, I don't know if I have it. I'll just have to download it from the office. It dynamically sorts sectors, and then it tells me by net change. And then over here I've got them broken down from like airlines, brokers, drugs, chemicals, paper products, semiconductors in alphabetical order. And then within those sectors, it ranks those within the individual sectors from best to worst. All right? It takes like 18 hours to build, but I give it to you. I mean, it's time consuming. And I've only got stuff on there that trades good volume and that, moves fairly well, okay? Now what I do is I personally put the squeeze on the end of the daily charts so I can kind of filter out and make a short watch list of what sectors are in the squeeze, and within those sectors, what stocks inside those sectors are in the squeeze. So I don't have to sit there and go, no, drink, no. I'll dynamically filter them, and it'll bring the cream to the crop and go, okay, these guys are in the squeeze. It doesn't tell me when the squeeze is going to fire. It just tells me that they're in the squeeze, okay? Which helps me time saving for scanning purposes.
Well, daily squeeze?
Yeah, you can do it on any time frame, though.
I mean, you use it for just daily?
I do for swing trades, yes. But, I mean, you can use it on any time frame you're comfortable with. The radar screen, but with the equities, with my swing trades, I use the dailies, yeah. All right, so here's an example of the sectors dynamically sorted by who is in the squeeze. So the BBS ID is just Bollinger Band squeeze identification. If it's red, it tells me that it's in the squeeze, all right? So it just means heads up. This one may fire sometime in the future. I'll just write that on a watch list and put that in another radar screen to pay attention to. Now I have it dynamically hooked up right here, so if I click right here on symbol, like on the OSX, I have a daily chart that as soon as I click there, the daily chart launches. So I can see it, okay? So then I know, and then I can look at it and look at the past 10 signals and go, yes, yes, no, 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 no. Don't even mess with it. Doesn't even work on this stock. Or if you pull up an Intel or a Microsoft and you go, yes, 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 yes. Oh, man, yes, yes. Works, okay? And then I'll know. All right, so now here's an example of the daily of the semiconductor stocks, all the semiconductor stocks within the SOX index, dynamically sorted. So now I know that Texas Instrument, TQNT, National Semi, and Teradyne are in a daily squeeze. I'll click on the symbol, the daily chart launches, I take a look at the past 10 signals. If it's above 70 or 7 out of 10, or 6 out of 10, I can take it. If it's less than 6 out of 10, I don't even touch it. Okay?
6 out of 10 dots?
Of the signals, of the past 10 signals. I'll look at the past 10 signals, like on National Semi, you see up there? I'll click on National Semi, I'll look at a chart, and I'll go, it's just a real quick, it's a eye way or a basic back test, and you go, that one worked, that one worked, that one worked, that one worked. Okay, that one, no. If it has to be at least 6 out of 10 or better. 2 ways you can do it. You can either go on the first dot, or just like the daily on the indexes, if you miss it on the first dot, or if you're not comfortable with taking on the first dot, like if you want to sit there and go, okay, it fired off, but I want to see if it's really going to work. Then you can wait till either the 3rd or the 4th day to buy the pullback, or short the retracement in whichever direction you're looking at. So now, all I've got here is some examples of different markets on daily squeezes, okay? Google, signaled at 180. Obviously, we all know Google's trading at 300, okay? Pretty good signal, okay? Now, the one thing you have to notice is, look at the bottom of the chart. How many signals were there? There was one. I mean, it doesn't signal off a ton of times, but so far on Google, works pretty good. All right? It's 100%, but it's only fired off once, so it's an anomaly. But, I mean, it did fire off on Google and catch a lot of the run. Okay? Take a look at the bonds. I do not personally trade bonds. Just a disclaimer. You want bonds? See John. All right? But you did get a signal that fired off here, 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 here. So it does work on bonds. All I'm doing is I'm just beating you to death with chart examples of across the broad market spectrum. All right? Here's the daily ES. Fired along here, fired along here, along here, and along here. It also fired a short right here. Okay? So it did not catch the dead tops, did not catch the dead bottoms, but it will catch you some moves. Okay? That you'll have entry signals that you can work with. All right? Another example of Intel on the daily. Yep. I think it's Intel that it works like 9 out of 10 times on. Okay? Intel's a mom and pop stop. It doesn't move, but on the daily, if you can get something that works 70 or 80 or 90% of the time on something like Intel that's not real volatile, you can kind of put it as in a portfolio where you can sit on it and trade it a little bit. Questions? Somebody had one?
It looks like when the histogram starts to fade, does it have any characteristics that are different from the way it behaves on the 5-minute, or is it pretty much?
It means the same thing.
Okay.
If the question was, are the characteristics of the histogram different in an equity on a daily as opposed to a futures? No. It just means that it's potentially running out of gas. It's just saying, listen, I've lost momentum. It does not mean that momentum can't pause and then go lower. Like you can see here, it says, okay, I've lost my momentum. Boom, and then goes lower, and then it loses it again. It's just a heads up. It's like, hey, if you're short here, you might want to take some off the table and place a stop and see what happens.
Like in the video sometimes says, well, if it pull back to the 8 moving average, I'm going long for a swing for the S&P. But then you're not waiting for the squeeze to happen. You'll then go to a lower time frame for the squeeze, or just wait to hit the 8 moving average. I don't know.
What is your question? It sounded like you were asking me this earlier when I was placing the trade. You just pick a time frame to play. If you're playing a 15-minute chart.
No. You're going to go swing.
Okay.
But you're waiting for the stock to move into a certain point and to retest the lows or whatever.
Yeah.
But on the daily, it has not clicked the squeeze and
Okay.
fire on the squeeze in the daily. So would you go to a lower time frame to see if it has...
Oh, no, hold on. You're getting confused.
Okay.
Look, John on his swing trade stuff has a different methodology. I'm just showing you how the daily signals on different markets work. On some of John's swing methodology, he uses other tactics, not just the squeeze.
But I think you're also combining different setups.
Yeah,
like
she is. She's
if I'm waiting for a
too.
daily squeeze to fire off, I'm waiting for a daily squeeze to fire off. In the meantime, I may be doing pullbacks to an ADMA on a daily chart or something like that, but they're two different setups.
Oh, okay.
I'm not combining them.
Okay. I am.
Okay. Don't do that.
I won't. Anymore. I write it down.
Just say, don't do that.
Don't do that.
These are just other examples. The reason they're not all pretty and everything with the black background and everything like that, these are chart examples that are going to be out in the book that's coming out. So I'm just going to go through some of these. This is just some stuff for the squeeze. And we've had a couple of questions on how they work in different markets and stuff like that. So I just want to show you like how I use them like on currencies, the bonds, as well as some things like that. This is just a regular 5-minute chart. We've already gone over that. So I'm not going to go over that one in detail. But you can see right here, I mean, pretty much, as it fires off. The one thing I like about the squeeze and the way I play the squeeze a little bit differently than Hubert is I will get into a squeeze on a 5-minute chart. I will give it a 20-point stop, okay? But also for my entry, I'll use an entry against a pivot level. Now, I'm going to talk about pivots after lunch, so that'll make a little bit more sense. But as soon as the squeeze fires off, what I will do is wait for a retracement to a pivot level, and then that's when I'll get in. Okay? Then what I do is on the first half I'm getting at a plus 10, and then the second half I just wait until the momentum starts going back up, 2 up bars like that, and then I get out of the second half. And that's how I do the squeeze. Okay? Just another example here. It's just the same thing.
What's this?
I don't know. You made the chart. That is
It's a mouse thing.
That is the holy grail indicator right there.
It's a gold flat.
If you get an eye on your chart, definitely take it. Same thing here. So I get the short signal. I get the short. Say the short fires off here. Buy the first retracement back up to a pivot. Take out half off at plus 10, and then the other half off. And you can do, actually, I'll do 3 different things for an exit. 1, if it's a next pivot level, like if that pivot level looks like it's going to be resistance, you can take it off there. 2, you get like a tick reading, like plus 1,000 ticks, or in this case, minus 1,000 ticks. Or 3, you get like a scalper buy in this case. Those are things that I'm going to be covering a little bit later today. That's another example of the Dow. What I want to do is show some examples of some other markets here.
Keep going.
Wow, there's a lot of YMs.
I trade that a few times.
Okay. So, how many people here trade bonds? Okay. You guys know the joke between the difference? What's the difference between a bond and a bond salesman? Bonds mature. Ba-dum-bum. At some point, bonds mature. What happens here on the bonds? And I actually like bonds on a 5-minute chart on the squeeze are okay for day trading. My favorite charts for bonds, I like to swing trade bonds. So I'm looking at sometimes 60-minute charts, but really on the daily charts. But you can see here, like even on this on a 5-minute chart, it's good for 2 ticks. If you make any bond trade where you can make 2 to 4 ticks is great. 4 ticks in the bonds is like 25 points in the Dow or 2.5 points in the S&Ps. It's a good market to look at. What I like doing is having squeezes on multiple markets. So if nothing's setting up in the Dow or the S&Ps, I can go look at the bonds or the T-notes and see if there's a squeeze firing off. So
Bonds are those 10-year, 30-year?
Those are the 30-year. I prefer trading the 30-year bonds, but the 10-year bonds are also great. 10-year notes. Okay. Here's the bonds, like on a 5-minute chart. You can see you got a squeeze here that comes down. It comes back down, bounces up, you lose momentum, you get 4 ticks on that. Again, it's like getting 25 points in the Dow. Typically, trades that I'm doing in the bonds are happening because nothing's setting up in the stock index futures. My preference intraday is to trade the stock index futures, but when they're dead, I'll start looking to the bonds. So, if there's a squeeze that's firing off on the S&Ps at the same time as the bonds or the Dow, I'm going to focus on the S&Ps and the Dow. That's my first preference.
Oh, here's that question you had. You talking about this earlier? About it moving up now? It doesn't mean anything. It's the indicator, it's a volatility thing. It doesn't mean anything. It still works fine. If you want it to look all pretty,
Why doesn't it do that?
yeah. It's just not set to plot at the 0 line.
Yeah.
It doesn't mean anything.
You mentioned you go trade the bonds if the S&P and Dow slow.
Yep.
Are you looking at any other internals to see if the squeeze on the bonds will work?
Nope. There's no internals on the bonds, which is kind of nice. It's just like it's going, you take it. So on the bonds here, what happens, this is a daily chart, and this is my favorite chart to use to swing trade bonds, okay? Just squeezes on the daily. This one right here, it fires off at point A. We're around 112, 113. What I do is once it fires off, I then buy the first pullback to the 8 EMA, which happened here, and then I'll just stay in until we get 2 lower bars in a row. In this case, it happened at this point right here. Got almost 7 points in the bonds. Okay, that's like catching like 1 full point in the bonds is $1,000. So that's almost $7,000 on that trade. So it's like the equivalent of 30 times. It's like catching almost 200 points in the S&P. It's like 1,800 points in the Dow.
Okay, so when it fires on the daily, you wait for a pullback on the daily?
Yeah, so what I do on the daily charts on the squeeze is when the squeeze fires off, let's say it's a long squeeze, I'll buy the first pullback to the 8 exponential moving
You don't
average.
go to inter-day time frame to five.
No, remember I said don't do that.
Oh, okay, that's a no-no.
You're trading.
Ay.
Exactly. When
She
you're
was
trading,
she was wearing me out earlier. She's like, I'm in a swing trade. Let's take a look at the 60.
Yeah.
I'm like, it's a swing trade.
Nobody sees fire.
Yeah. It doesn't matter. It's a swing
yeah,
trade.
when you're doing a swing trade, just look at the daily charts.
Well,
If you-
that's a disciplinary.
I swear to God, I know what I'm talking about.
He's done it once before.
20 in a row. So we use for a stop, John.
Okay, on this first stop, and this is typical of any like swing play on the squeezes and stuff like that. Okay, so right here, we fire off here, and we come back to the first pullback. What I'll do is just go back to the last 3 bars from the signal, so 1, 2, 3, and then the lows of that bar I use as the stop. Okay. Now we're going to talk later about either today or tomorrow about how to trail those up and things like that. But that's what, on a daily chart. That's what I use for a stop.
Bars back from the signal.
Maybe.
Perhaps. 3 bars back from the signal?
Yeah. So signal fires off here. Then I count back 1, 2, 3. So 1, 2, 3 bars, and then the low of that bar in this case is going to be my stop. And there's really no need to trail it because what you're doing on this is you just want to stay in until the momentum runs out. So I do not trail the stops on squeeze plays.
And you say you buy the first pullback to the 80 period?
Sorry, no, the 8 single digit, 8 period exponential moving average. And I'll have some examples of that later.
How often do you miss? No, it doesn't pull back. You don't.
I do miss once in a while. I used to get really, really angry at that. No, but what happens is, okay, let's say here, this is what I would do. I don't miss the trade. I miss what I call like the perfect entry. So in this case, okay, what happens is the squeeze fires off here, right? And you get the pullback, and then it comes back up. If this pullback, if I wouldn't have gotten filled, I also will place a buy stop above the highs of that day too. So I'm going to get into the trade. Okay, it's a swing trade. The entry isn't as critical. But if we come back to the ADMA, that's my ideal entry, but I also don't want to miss the trade because daily signals happen like 6 or 7 times a year.
What was your stop entry again? You said the high of which bar?
So stop entry here. It fires off here, right? If I can hold that steady. So I just go back 3 bars, 1, 2, 3, and then the low of that bar is what I use as my stop.
I was talking
Oh,
about
no,
the
I'm
buy
talking about
stop.
your buy stop entry though.
Gotcha. So you guys could have stopped me a little earlier.
But John, that is important, that the stop, if the last 3 days, we'll say, you're going to take the low of the last 3 days, whatever it is.
Right.
So, because it might be that the day before was actually lower than the 2 days prior to that.
Well, yeah, and it's a judgment call here. I mean, you want to give it some room. I mean, let's say that this was the day that it fired off, or no, like right here. Let's say that this was the day that it fired off, and if you go back 3 bars, it's like almost right at the same instance there. So, I mean, you want to give it a little bit of room like that. I mean, as a rule of thumb, like on the Dow on a swing trade, I'm using a 100-point stop, give or take.
You're crazy.
But
For a profitable one.
That's the best thing about the markets. I mean, it takes all kinds. I mean, you can say, dude, you're nuts. Like, ding, ding, ding.
Yeah, but you're a profitable now. I prefer to be profitable now than a...
Go ahead.
I guess I still don't quite understand. Hold on.
Wait.
okay, go ahead.
You talk about the pullback to ADMA, but your buy stop versus going
Right.
high, is that the high of the bar that?
Yeah, okay, let's look at a couple different scenarios here. Let's say in this case here, I didn't get filled, and we started going higher, so I'm placing a buy stop above the high of the signal bar. It's like,
All right, I got that one. To go to your other thing.
all right. So now let's say worst case scenario, it just goes higher, higher, higher. Then I'm going to buy a pullback to this level on the signal bar. There are going to be instances sometimes where you get the squeeze and it just keeps going, and in those cases I miss it. But I found that most of the time, like 8, 9 times out of 10, I'm going to be able to get in on the pullback to the 8-period exponential moving average or a buy stop through the highs of the signal bar. Okay, I'll show you more examples of this. But really, the big thing about swing trades, and part of the reason I like them, is your entries don't need to be as precise. I mean, you're using bigger stops. If it fires off, you can just buy it, or you can and just take the heat that way. But don't look at a 60-minute chart. Okay. So here's another daily on the S&Ps. Okay. So the long squeeze fires off here. And actually, this is a pretty good example. So,
Oh, wait. What is this? No, it's not going. It was almost a total momentum shift, but it's just a really
Pretty close.
It's pretty close. It's
Yeah.
not a perfect one, but it's close.
So you can see it fires off here, okay? And now the first day here, it keeps going higher, and so you can see the squeeze is on for a while. And so actually the squeeze fires off, I don't even get filled till 6 days later. Okay, so swing trades, you don't have to chase a lot of times like that, it's just being patient. So actually I ended up getting the entry here. Where's my stop? Okay, this is the signal bar, so go back 3 bars. So it's a pretty decent stop here, about 15 points. And then you just stay on until the momentum rolls over and, boom, you're done. The nice thing about swing trades like that, and there's a couple of different ways you can do this, is that, so once we get into it here, you can see like, okay, we get 1 down bar here, up, then we go back higher. And then we get 1 down bar here, but then we go higher again. Now finally we get 2 down bars in a row, and so that's when you get out. And what's nice is on the squeeze indicator, the bars are actually colored. So you don't have to, like Hubert was showing you had like dark blue and then lighter blue, so you can see which ones they are. But the thing I like about swing trading is I use my day trading as kind of bread and butter. I like it for cash flow. But swing trading is where you really catch the big moves. That's kind of, swing trading is more for wealth creation. Day trading is more for daily cash flow, pay the bills, pay the mortgage, things like that.
I didn't hear, why didn't you get filled right away? Why did it take a few days?
Oh, okay. Well, what happened is, for me, I don't, when it fires off a swing trade, a squeeze on a daily chart, I don't just take it at the market, okay? So it fires off here. I place an order to get long at the ADMA, which the ADMA is not on here, but it's about like right here.
And that's the 8 EMA, right?
8.
8.
So it comes back down, it doesn't touch it, so I don't get filled, don't get filled, don't get filled, don't get filled, and finally it's like on the 5th or 6th day when it finally comes back enough that I get filled. Yes?
What do you use as a criteria to identify that momentum is over?
You mean
How many bars of the momentum will just
oh, yeah, sure.
Or if there's anything,
Two in a row.
So yeah, what I'm looking for is 2 down bars in a row. So like as we're coming up here, you can see like right here, 1 down bar, then we go higher again. Higher, 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 even, higher, 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 down, up, higher bar, lower, lower. 2 lower bars in a row, I get out.
Okay. But you can apply the same thing for intraday.
Oh, absolutely.
You see when the momentum rolls to 2 bars?
Yes.
John,
I do the same thing intraday.
Do you ever use, like, if you get toward R3 or something like that, you use that to override the...
Yeah, now not on the question, if I get to an R3 or something like that, I'll use that to override it. On a swing trade, no. None of the intraday stuff comes into play on a swing trade. On a day trade, if I get into a squeeze long, okay, and I get out of the first half at 10 points, and then the second half, I mean, we're just slamming right into R3 and the momentum's still strong, sure. I mean, that's a great place to take profits. And when I talk about the pivots, you'll see how I kind of incorporate squeeze with the pivots. Okay?
Did you say, oh, I'm sorry, go ahead, you're first.
As I say, with John, when you exit that trade with those 2 down bars on the momentum side, I mean, that seems a little early when without other confirmation, it would seem, because what's happened is that by looking at that chart, I would think that some guys who missed the move are finally jumping in.
Oh, sure.
And taking it a little further.
And I guess to answer your question on that, what I do with this is on the squeeze, I mean, I'll play the squeeze, one way like this, but there are other methods you can use. A lot of times on stuff like this too. I mean, if I see this, to me, that's a clear exit signal. But if it's for whatever reasons you believe it might go higher, then just use like a 3-bar trailing stop and just stay in it until you get taken out. And that's mostly what I do with currencies.
So you don't pay attention at all to the type of fiddlesticks and dojis, no dojis, no?
That's a good question. I don't. Even though like some of these, it's like, you've got a bearish engulfing here. Just look at how many people were shaken out of that before the rest of the move. I mean, that's a great candle, but I'm looking for, like on a swing trade, where's the momentum? And what happens then is the 6 or 7 times a year when a squeeze fires off, you're in a position where it's a unique position in the markets where you're not going to be in a sideways consolidation. You're going to get some velocity and some momentum going forward, and I want to be a participant in that. What happens in a swing trade is you're not going to make money every day, but on the days that there are big moves, you're going to be positioned for it. So I just ignore Bearish engulfing candles, stochastics overbought to me is the most worthless indicator on the planet. MACD overbought, it doesn't matter.
It's a little slow too.
Yeah, those are things I'll talk about more, but it's
You're talking daily now.
daily, right? There's some tricks to using those that I'm going to discuss probably Tuesday or Wednesday that we'll talk about, but for stuff like this is the chart that I'm looking at. I mean, it keeps it very simple. It's price. I'm not trying to second guess it. When it runs out of momentum, I'll get out. Or in the case of like currencies, I'll just keep trailing a 3-bar trailing stop until I get taken out. Okay?
15-point stop on the E-minis here.
Uh-huh.
You have a risk. What are your statistics, if any, on successful trades?
I haven't had any successful trades doing this, but
It looks like it'll work on the chart, though. Good luck.
Yeah, I mean, the reason I do this is because over the course of the years of doing this, it's working for me.
Try not to get too hung up on percentages. Here's a great percentage trade. I know. Look, it comes back down to market direction, experience, and stuff like that. Here's a good trade. It works like 98% of the time. Use a 2-cent target and no stop on an equity trade.
It's a high probability trade.
Son of a bitch will work like 98% of the time. But you won't make a dime. I mean, it's got 98% though. I mean, just don't get too caught up on it. I mean, you want to know if it works in general.
Yeah, the thing that's going to happen out of 7 squeezes, I generally get stopped out of 1. 3 of them are okay trades, make like 100 points on the Dow. And then you get 1 or 2 that are just phenomenal. Like this was phenomenal, 67 points in the S&Ps. We also did it in the Dow. It was like 700 points in the Dow. You only need 1 of those a year to make your year. So that's why you just want to be in the trade, let it go. You don't know if it's going to be a super winner or not, but by following the setup like that, at least you'll not get suckered out of the trade by looking at too much stuff.
Does the 6 or 7 times per year also apply to the indexes in terms of the daily?
I found that the daily squeeze fires off between like 6 and 10 times per year on about any chart. And that's the stock indexes. The bonds more like 3 or 4, stuff like that.
Did I understand you correctly to say that even though you wait for it to come back to the ADMA or else you get it in the buy stop, because it's a swing play, it would be okay to just take it wherever it is, right?
Absolutely. It's okay to just jump right on in. Usually in my experience, I actually used to just get in, but I found that anytime I would just jump in, I ended up with taking a couple of days of heat. I found it's like, well, why don't I just try buying during that period? And I found that that's worked pretty good. If a market, it's one of those, and it's a swing trade, if it looks like it's running away from you, I mean, if, say you're going to use 10 lots on it, I mean, you can go ahead and get like 2 or 3 lots and stuff like that. But I found that generally by being patient, you're going to get a good fill like that. But it's not critical. If it fires, you just take it, and that's fine too.
One last quick piece. Do I understand correctly that market, if you're doing a swing play on an index, that market internals also do not apply because it's on a daily?
Correct. So if you're looking at a daily, you're doing a daily play, all the stuff that happens intraday does not matter, literally. It just doesn't even take into account what's going on.
So your signal is just the squeeze itself?
Correct.
There's one thing here that's counterintuitive to me. The stock indices on a daily basis are notoriously non-trending. They tend to be more non-trending.
They're gappy.
Yeah. So jumping in on a squeeze like this on a daily would make more sense to me on an individual stock or a bond or something. But you're saying you're having good experience with the total number of squeezes you get, for example, on the E-mini S&P.
Literally, out of the last 10 of these I've taken, I've been stopped out once.
Really?
I mean, it's just what happens is that you're in these trades for like 3 weeks to 6 weeks, and if you can't, I know a lot of people who take them and whatever. I mean, I'll get phone calls all the time where it's like, well, the trend closed at this, so I took it out, and I got my 2 points profit, and it's like, then 40 points later they're calling, going, well, should I have stayed in it? And if you try to outthink this trade, okay, it's not going to work as well. Just let it happen, and then see the results that way.
280 momentum bars.
Yeah.
The Russell also?
Yeah. This works on any index.
You like the Russell, don't you?
Jerry?
There are different settings between the Forex and the indexes?
No, the settings are the same. What will happen, are there any different settings on Forex in the indexes? The settings are the same, but what it is that there's the 1, 2, or 3 setting on the indicator itself just adapts, makes the histogram look more normal on the thing, but the settings are the same. Okay.
Any caveats if you have a weekly that looks funny?
The daily squeeze is the daily squeeze. Okay, I don't look at the weeklies. I mean, yeah, you a lot of times when the weekly is just turning higher, those are going to be the best buy signals. But you don't need. There's no reason to outthink it, because even if the weeklies and the monthlies are going over, there are going to be times when you have a counter trend upward rally, and that's a good way to catch it too. Now I understand what you're trying to do, but it's just again, it's what I like about these is I don't have to think about them, because I've already got enough other things to think about. It's just like, oh great, I'm gonna put it on, put my stop on, see what happens.
If you trade a lot of contracts in there, you've got to look at that every day.
Not intraday.
Yeah, that's put 100 contracts in, it's $39 million.
Yep, and if I get stopped out, it's part of my plan. That's how much money I'm willing to lose on that trade.
Yeah. Setting ways to pull back to the 80 EMA.
Yep.
So if it goes up for a while, pulls back the 80 EMA, that's going to be higher than it was when it fired.
Correct.
Okay. And that's where you take it, where it currently is.
Well, you say that, but remember, like right here, on this S&P trade, it fired here, and I ended up getting in at the same level where it fired off. But in some cases it'll be a little higher, a little lower. Again, it's a swing trade. You're trying to make 20 or 30 S&P points. An entry, a 4 or 5 point difference is not a huge deal.
But I was wondering, do you place the order that it fires, knowing that it's higher, but you set it at the 80 EMA that day?
Yes.
Okay.
Yeah.
Go for it.
Here's another example of the S&P play. Also, too, Bob, to answer your question, I mean, what you do with these trades is you set up enough lots. I mean, you go backwards. If you don't want to lose more than 2% of your account on the swing trade, and if 100 lots would mean you lose 30% of your account, then you adjust it to like 20 lots or whatever it is. So I always do the math backwards like that. So I do the signal, then the stop size, and then I work backwards to figure out how many contracts I'm allowed to trade on that. Okay, here you can see that here's a short play in the S&Ps. This is kind of more of a typical, I would say, a typical play in the S&Ps. It fires off here. All right, you can see we fire off here. Boom, rally, rally, rally. Get short on a rally to the 80 EMA, and then just stay in it. So we get up, one up bar here, up, down again, down again, down again, down again, up, up, get out, 26 points in, 2 weeks, 10 trading days, or something like that?
What date is that on that? I can't.
That's July 2004. If you guys remember, too, when I was talking about the trend, what happens when the trend gets a reading over 2? On this day right here, the trend, first trading day in July, I think it was right here, or right here, whatever it was, we got a trading day where the trend was over 2. And the next day, it was either this one or this one. But anyway, the next day the market couldn't rally, and then look what happened. Boom. And that was in July. But irrespective of that, I just took the squeeze play. So the daily squeeze, by the way, if we have a, gosh, do I have a chart of that? I might. I'll look at it during lunch. But the daily squeeze, if you put this on charts of the 87 crash, it fired off before the crash of 97, and the crash of 1929. Before the markets crashed, it was already fired to squeeze short. When I see squeeze short setting up, I like it because, hey, I might get a little bit, and hey, we might crash.
Oh my God.
It's time to shut everything down.
It's time for lunch.
Wait, we're almost done here. This is the S&P example of 67 points. This is what happened on the Dow in that same trade. This was a 702-point play. You can see here, boom, fires off. Get the first pullback to the 8. Actually, in this case, I had to do the buy stop. But you just stay in until you get 2 lower bars in a row. I mean, here you got the lower bar, but then it went up again. Lower bar, but I mean, it's the same thing. I mean, it doesn't look like much because this chart is small, but you can see 9,500, 10,500. Okay, so Forex, I actually like this in Forex a lot too. Same thing here. This fires off. Short, get in it. Now, what I do on intraday stuff To clarify, if I'm looking at a daily chart, then I don't go to the 60 to see what I can do. On a 60-minute chart, it stands in and of itself. Okay? Capiche? Yo entiendes?
Try different time frames on it.
Yeah, it's
absolutely.
different. Yeah. Don't use like a 5-minute squeeze on the euro is not a real good. It'll churn you to death. On a euro, you need a little bit longer time frame.
Yeah, on the currencies, I really only play like 60 minutes and above. I'm not really a day trader with currencies. What I do on the 60-minute, now this is a little different than the dailies, okay? On the dailies, I do any daily trade I'm doing, I do just as I had talked about. I try to buy the first pullback to the ADMA. On the 60-minute chart, when it fires off, I just take it. It's not really too, again, you're trying to get a bigger move here. If you've got a window of 10 to 20 pips to get your entry, so I'm not trying to finesse it. So when it fires off, I just get short, in this case, and then I just stay in. In this case, we actually don't lose momentum. And this trade was like a year ago, and it was just on a 60-minute trade like this. When we closed at 4 o'clock, I just got out, and this was a 106 pip move. If you guys know, 106 pips is like catching 212 points in the Dow. Okay.
You said at 4 o'clock you got out, so this is strictly intraday.
Yeah, in this case, I just got out. I mean, this was the trade. This trade that I did was like a year ago. I mean, these days I tend to stay in them more until because what'll happen is, I'm in bed at night, so like on a daily squeeze, I'll just stay in it. On a 60-minute, the other thing you can do is you just trail stop. So like if I was going to go to bed here, I would just put a stop. Go back 3 bars, put a stop, and then just leave it, and then wake up the next morning and see what happens. And in those cases, sometimes you can catch some really big overnight moves too. Here's a long squeeze. What chart?
5 minutes.
Very good. And long squeeze in the 5-minute. I actually don't use it on the intraday much.
I don't like it. It's too choppy on the 5.
Yeah, I mean, really for the currencies, I'm looking for bigger time frame squeezes. There are setups that happen on the 5-minute, but again, personally, I'm not really day trading currencies. I like to be in currencies for like at least 4 to 6 hours at a minimum, and then potentially days and weeks and stuff like that. But you can see that the same concept is true, holds here. It works really good on Google.
Oh, Google, on the squeeze on Google that's been kicking lately is a 3-minute chart on Google. It works pretty good. Use the squeeze entry. I'm just telling you what's working really good right now on Google. A 3-minute chart on Google. Use the standard 20 length on the squeeze. Enter on the squeeze and exit when the TTM changes color. All right? That's how I've been messing around with Google lately. It's been working really good. Enter on the squeeze, 3-minute chart, and let's say it's a long and the TTM's blue, 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 blue. Then you get red, either 1 red or 2 reds on the TTM. Exit. Okay? It's been working.
What time frame?
3-minute. 3-minute on Google. It's been working really good. There's Intel again. This is from 2003 through 2004. Intel works really good on too. On the squeeze. Go ahead, click them. On the daily. That's QLGC. It's not a big deal. They're just more examples. Taser dailies.
Yeah, Taser dailies it worked pretty good on. This was a nice one in Taser. You can see. What's kind of nice too is like when a squeeze fires off, you don't know if necessarily it's going to be a huge move. I mean, usually it works a little bit in your favor. But what I found more often than not is that when you actually do get a really good big move, it's generally preceded by a squeeze. So it's kind of like it's like you're rolling the dice. I mean, it's probably going to work out, but you don't know if it's just going to be a little got a couple of points in it, or boom, it was the big one.
The question was, is the squeeze indicator our most frequent in one? It's just really good because it makes the decision process a little easier. And you can kind of you can fit it to a trader's personality. Like if he's a scalper, a 50 tick will work. If he's like a position trader, a 5 minutes probably going to work. If it's a little bit more swing trade, a 60 might work better. So it's good. I mean, it can kind of fit the personalities a little bit better.
Can trade stations scan for squeezes on a daily basis that fire up?
It can tell you when it's in a squeeze, but not when it's firing off yet. Let me work with the programmers, and I'll have it sometime in the future. The good thing about like the indicators, though, unless it's like a huge improvement on the stuff, we never ever charge for it again. I mean, because I hate software companies that every time they release, we released a new way to change color. It's $3,000 more. I hate software companies that do that. So unless it's just a huge upgrade,
So what we're going to do now
Same
is
price.
we'll come back and answer any questions, but let's go get some food.
Yeah.
Before this, we were talking about the squeeze. You guys had a lot of questions about like exits and stuff like that. This one here will kind of tie up everything that I do with trading. Okay, we've talked about gap plays. We've talked about reading intraday indicators. We've talked about the squeeze plays. Okay, and I use the squeeze plays mostly for swings, but I also use them intraday. And the pivot plays here are going to tie in pretty much everything I do with day trading. Okay. And I guess what I want you guys to kind of think about when you're doing this, well, I'll just kind of go through it. But what you're going to see is that each of these things that we talk about and each of these things that we do build upon one another. Okay? So if you're playing the gap play and you don't feel comfortable using a 1.5 to 1 risk-reward ratio, you can use the gap play with the pivots. Or earlier we were talking about when to get out of a trade. The pivots are one of my favorite ways to get into and out of a trade. Okay, because it forces discipline in your trading. If you're an impulsive trader, pivots are one of the best things that you can do because it forces you to wait for an entry, forces you to wait for an exit. I end up missing trades, but you know what? The ones that I do get have a high probability of success. And also with the pivot plays, it's something that if you're working full time, it's something that it's very nice to do because you can set up your parameters, go to a meeting, come back and see what happened, kind of a thing. So let's just jump right into this. You guys feel free to ask questions as we go. So what I'm going to do with this is I'm not going to sit here and just kind of read all this verbatim. I'm just going to kind of just talk about, really what this is. The best thing that I like about the pivots is that the first thing it does is it takes the guesswork out of your entry levels for the trading day. Okay, the pivots are going to give you entry and exit levels prior to the market being open. Okay, I do like that. So before the market opens up, I already know the potential levels that I'm going to buy against and sell against based on the pivots. Okay. Now, Bob was asking earlier, it's like, okay, what about there's all these different formulas to use on the pivots, different time frames and things like that. So what I'm going to do is just show you what I use. This is the actual formula that I use, and this should be in your booklet, page 155. This is one of the standard formulas. This is not something that I've tweaked to make magic or anything like that, but it just happens to be the one that I use. And you can see that we've got, and most people know how the pivots work. I mean, you take the pivot, you get the high-low close of the previous day, divide by 3. You get a pivot the next trading day. And what happens is, who used to use the people that started this were the floor traders because they didn't have charts and they wanted some levels to buy and sell against. Well, these levels are still very pertinent for today for a couple of reasons, which I'll talk about. So the pivot, you just take the high-low close, divide by 3. And then for R3, you just take the pivot, you multiply it by 2, subtract the low, and then you get that level, and so on. Where mine's different than I've noticed than a lot of others is the R3 and S3 calculations. Many R3 calculations take R2 plus the high minus the low, and I just use R1 plus the high minus the low. All right? If you guys are looking at this going, okay, this makes no sense to me, it's okay. You don't need to know these formulas or calculate it the same way every time. I mean, or go through this process, but it's just so you know which formula it is. So the reason I do this is that if you're using an automated pivot program, like many things have, they're going to have eSignals, TradeStation, they all have these automatic pivot programs. They all may use different formulas. They may gather data from different time frames, and so it can create kind of different pivots. So what I do is I actually manually put these numbers into an Excel spreadsheet. You just put in the high-low close, the Excel calculates up all the pivots, and now you have the pivot levels for the day. This is an Excel spreadsheet. This Excel spreadsheet, I have it. I can just email it to you guys. That's something I can email to you after this is over. And then the second thing is the pivots that we created in TradeStation has the manual override. So I can actually manually enter in the high-low close that I want to use, which is the next part of this is it's the regular session, not the regular session like the 9:30 to 4, which is what a lot of people use for pivots. It's the actual Globex session. So what I'm interested in is what are the highs over the last 24 hours and the lows of the last 24 hours, because I want to know the true range of what the market is doing and take that account when I'm making my pivots. Okay. Now the key with this is that if you put, sometimes on some charting packages, you'll put on 24 hour and it'll go like midnight to midnight, okay? That's worthless. You've got to have it close at the settlement price of the futures. So the settlement price on the S&Ps, the Russell, and the NASDAQ is at 4:15 p.m. Eastern. The settlement price on the Dow is 5 o'clock p.m. Eastern. Now, what I do with this is in TradeStation is if you just set up like an @YM symbol, regular session in TradeStation, you're good to go. Because what it's going to do, it's automatically going to start collecting data when the futures open and stop collecting data when it closes. Like the Dow will close at 5 o'clock Eastern and then reopen a couple hours later, and then it's going to create a new bar and start doing it that way. So all you have to do in TradeStation is, if you've got it set up that way, is just take up the high-low close of the previous day's bar, and you're good to go. Okay? Does that make sense? I'm going to go through a couple of slides that explain all that, but since I just did it, I just wanted to, I'll probably fly right through them. Yep.
Forex, 5 p.m.
You know, actually, I don't use pivots on Forex. They actually, I know a guy that does use pivots on Forex, and they work pretty good. I use more literally just price breaks, which is some plays that I'll go over. But yeah, you know, you get at 4:30 when they close in New York.
Or else you want to do the opening sessions maybe from Asia or from South.
Yeah, that's part of it, is because it's kind of a, you know, what you could do is you just pick one. You know, New York open, New York close, stuff like that. Yes.
I'm just curious, do you use the same time frame for the Russells? I remember like 2 days in a row in your newsletter, I think your close or one of your prices was different in Russell than the TradeStation gave. I was just wondering if you use the exact same time frame and the same accent.
I do. What'll happen sometimes is, like on the newsletters, I mean, I don't actually key in the data on them, and sometimes they may mistype it or something like that. We try to make sure that it's the same, but it's somebody who's putting in that stuff manually. So it may be something on the newsletter. If it says in TradeStation, TradeStation is almost always right on that. If it's ever confused, just go to the CME website or the CBOT website and just check the settlement prices. And then that way you'll have for sure what the number is. Because sometimes where it gets kind of goofy is, like, say at 4:10, IBM comes out with earnings, and then you get some weird, you know, movement right there. Sometimes it's kind of hard to figure out what exactly the closing price was. And that's when you want to go see what the settlement was on the futures. Okay? Most of the time it's pretty straightforward. Okay. So what happens then is when you get the pivot levels, you're just creating levels on the chart. I mean, it's very simple. You know, you're going to get R1, R2, R3, S1, S2, S3, and then this is what I just call the central pivot. It's just the daily central pivot. This is the most important one. I will always fade the first move. One of my first trades of the day, besides the gap play, is I'll fade the first move to the central pivot. You know, as an example right here, we open up at 9:30. We come down, boom, buy the move to the pivot. Half off at plus 10, and either, you know, it's actually, that didn't quite make it up plus 10, but it's the same thing where I'll put a 20-point stop, get out at plus 10, raise the stop, and then I'll show you some exit strategies that I use that way. I've got some setups here that I'm going to go over, but I just want to show you that. Now, one of the biggest questions I get is, how do you know whether to fade a move to a pivot or if it's going to break through, okay? And the good thing about pivots is they'll really give you, they'll key in on what kind of market that you're having that day, okay? If the markets come up to a pivot level and consolidate for 10, 15, 20 minutes and then continue on, it's telling you you've got a trending market that day, okay? The markets are generally going to go to a pivot level and pause. If it's going to be a trending market, then they're just going to keep on going. What happens on those kind of days is that I then buy the first retracement back to that pivot, okay? So if the market comes up to a pivot level, especially the first test of the day, I mean, you got to wait and see what's going to happen, right? So the first test of the day of like an R1 or an S1, if it busts through it to the upside, then I'm just going to buy the first pullback. If it comes up and it can't make it through and starts coming all the way back down again, then I'll fade the first move to the pivot level below it. All right, I've got examples, so I just want to give you an idea. This is, besides the tick fade, which is something that we haven't talked about yet, the pivots are one of my favorite plays, my favorite play to do on choppy days. On choppy days, there's not a lot to do. When you've got the pivot set up, you can put in your buy and sell orders and then just work on something else, okay? And it's a great setup for choppy days. The other thing to remember that it's very, very rare when the markets hit or go through their S3 or R3 levels, okay? What happens now is that, like on the London bombings pre-market, the Dow stopped just below S3 and then turned around and went higher, okay? What happens in this case is it keeps a trader, it keeps the emotions in check. If, you know, a lot of times people will get excited, oh, the market's falling, it's going to fall forever. There's like it's a 90% chance that when it gets to S2 that it's going to stop and reverse from there, or at least that's going to halt it. There's like a 98% chance that it's not going to get through S3. So instead of getting really, really excited and piling on all these contracts because the market's crashing, you're going to know that because we're now at S2, S3, the market's probably running out of gas, and it's probably going to reverse. And the reverse also is true on the upside. Okay, the market's only going to move so much in any given day. And those are the extreme levels, and I've only seen, I think last year it was like 4 times where they closed above those extreme levels. And the times that it did that, the previous day's range was pretty narrow. So when you've got a high-low close that's pretty narrow, guess what? You're going to have pivots that are pretty narrow. If you got a high-low close that's pretty wide, then your pivots are going to take up a wider space there. And the other thing too that's important is I also not only do I look at the daily. And you can see here, I mean, this is an example of an extreme day. You've got the market, it gapped down real hard, came down about almost to S3, reversed, went all the way to R3, and then came back down and pretty much closed in the middle. This is pretty typical of an extreme day. It's going to try R3, see if it can bust through. Can't do it. Same on the bottom, too. The other thing I like to look at in addition to the daily pivots is the weekly pivots. And the biggest question I get on the weekly pivots is that, is it calculated with a rolling week, you know, like the last 5 days, or is it actually the weekly bar? It's actually the weekly bar. So the weekly pivots, you only change them 52 times a year. Okay? For the weekly pivots, I want to take the high-low close of the previous week, and then those pivots are going to be good the entire rest of the week. For the monthly pivots, I'm going to take the high-low close of the previous month. So today's, you know, July 18th. The monthly pivots I've been using for the June high-low close, and I've been using them for the past 18 trading days or however many trading days we've had so far in July. So they don't change very often. But what happens is a lot of times the market will actually come to these levels and reverse off of them, and a lot of people are not sure why the market reversed, because a lot of people don't watch the weekly or the monthly pivots. Well, if you've got them on your chart, you'll see where they come into play. And I think I've got an example of that here. Well, we'll get to that too. So here's an example here. So here's the central pivot, here's R1, here's S1. So what I like to do as well is put in the midpoints, which literally is the midpoint between R1 and the pivot, okay? And then S1. Now look what happens here in a couple of these places when you add in the weekly and the monthly pivot levels. Okay, like right now you're going to see like, okay, the market came up here and stopped and came back down, or the market came up here and came back down. When you actually add the monthly and weekly levels, you can see like, okay, oh, there's the monthly level, there's a weekly level there, different things like that. So they are important to have in there, and by having those levels in there, you're going to get more of a kind of a full-scale picture of all the support and resistance levels for that trading day. Yeah. This is stuff we've already just talked about. This is a picture of the actual, and I've got some more of these. I mean, this is the day trading chart that I use. And what I'm doing here is I'm going to go through this, and I just want to get into the examples, because the examples will really explain more here. All right, let's jump to page 186. I'm just going to summarize kind of all the text that we've gone through. So one of the first questions is why do pivots work? So pivots work for 2 reasons. One, we were talking about that cycle earlier of like, markets not moving because they want to, moving because they have to on all time frames. Well, what I found, and this is in sitting with and working with other traders, is that a lot of times, like right here, let's say you've got people who have chased this market higher and bought right here. Generally, their suffering period is about 2 or 3 points. And then what will happen, so they get in here long, drift, stop, and then the last of the short-term traders get stopped out, and then we're able to reverse and go higher. A lot of times in that situation, the pivots will act as kind of a natural barrier, a natural place psychologically where people are getting into trades late and then getting stopped out. Okay, does that make sense? So it's kind of that pain-pleasure cycle. It really is a great way to mark, here's the chasers, then they get stopped out, and what you're doing is pretty much fading the chasers, okay? Fading newer people, fading chasers, that's one of the things that pivots is set up to do. Yeah, we're not going to read all that. The other reason that they work is the way that the pit is set up on the CME, all right? What happens on the pit is you've got this huge circle of traders. All the brokers are on the top step, and so all the experienced traders in the pit are standing there on the top step next to all the brokers. Okay, that's the prime space. Generally, when an experienced S&P person gets that, they get to hold it. Okay, nobody can take their spot unless these guys like run out of money. How they secure these positions, a lot of it's the length of time they've been there, their ability to execute large orders is not just one lots, and it's politics. I mean, the people that are right there make the most money. The people who are newer traders, they get stuck in the center of the pit. Okay, they got to sit there and try to fight for orders, try to figure out what's going on and things like that. So what will happen a lot of times is that the guys on the outside of the pit will see that the broker's trying to fill 1,000 lot. Okay, so they're going to sit there and try to bid it up a little bit and then sell it to this guy. Well, now the guys on the center of the pit, they see what's going on and they try to get in on the action. So the experienced floor trader selling it to the broker, who's selling it to the guy in the middle, who's now trying to sell it to a dentist somewhere. Okay, which is pretty much how it goes. This cycle lasts about two S&P points. And 2 S&P points is usually about how the pivots and the midpoints are drawn together. So that's why you'll see it's a real slow move, and then something will start up off one of the pivots, come up to the midpoint, and that's kind of what's happening in the pits right there. Okay? So it's just important to realize what's kind of going on in the pits, what's going on psychologically in terms of everything there. So here, just some examples. This is like some examples of trades here. I mean, I've got these examples in the book. These are actually examples from the book that's going to be coming out. And I used them like this, but they don't really reflect how I look at the charts. So what I did is I went ahead and put in like 20 new charts, which we'll look at, which are towards the back. So I'm just going to go over a couple of plays on these. But just as an example, like here's kind of a choppy day. A choppy day on the pivots. Okay, you can see here we gap down. And if you gap right into a pivot here, that's actually a great place to get in. Even though it comes down like 1.5 points or 2, with a gap, we're using, playing with a gap, you're using kind of a wider risk-reward parameter. All right, so now the gap fills. Now, this play that I did here is really a gap play that I did. I like it when the gaps actually line up with the pivots. Okay, there's some confluence there that I like to see. Now, what will happen here is once the gap fills, guess what? I can start setting up in order to go short at this level. Remember when Hubert was talking about when the gap fills 62% of the time, it's then going to go back in the direction from whence it came. That's the case there. So what I'll do here is if the market's rallying up to this level and I've got an order to short and I get filled, I'm going to place on the S&Ps, I'm going to place a 2-point stop. I'm going to get out of half my trade at +1, and then the other half of my trade, I'm going to get out at the next pivot level. Now, there's 3 reasons why I'd get out of the second half of the trade. 1, it hits the pivot level. 2, I get what's called a scalper buy in that situation, which is what I'll show you about in a second. Or 3, we get like a -1,000 tick reading.
And you consider a midpoint to be a pivot level?
That's a good question. I do treat midpoints as pivot levels. I have a little more faith in the regular pivot levels for entries. But on choppy days, the midpoints work just as well as the regular pivots. In general, it's like if in the ideal world, I'm getting in at a regular pivot level and using the midpoint to start exiting out some of the trade. Here's an example of a market on a trending day. Okay. Here we go. The market, the first trade, the first test of the pivots, unless it's the actual central pivot, and I'm just kind of waiting. I want to see what kind of personality the market has that day. You can see we blow through the daily pivot level. When this happens, when we get through this, I'll try to buy the first pullback to the pivot. In this particular case, it only went through a little bit, but it's like when it comes back up, when it gets like midway in between like this, then I'll set up an order to buy the first pullback. Okay? In this case, it never pulled back enough to get filled. Okay? That's fine. So now we get up to the second one. And because this market it blows through this one too, I buy the first pullback right here. Place a 2-point stop. So the 2-point stop would be down here at 565. Comes down, I don't get stopped out. Get out of +1. And at this point, when I get out of +1, I just raise my stop from 2 points, okay, break even -2 points to break even -1 point. So now I move my stop up to 566, and then the second half of my target is going to be either the next pivot level or a scalper sell. And we're going to talk about the scalper sells here in a second. Okay, does this make, it's a pretty basic concept on this. This is another example of a trending market. It blows through the first time. You try to buy a pullback. This is the Russell. Blows through again. Try to buy the pullback. On this particular one, and this is actually a good example because what I do with the pivots, remember when I was talking about the gaps, trying to get a little bit in front of the gaps and for an exit strategy? For the pivots, I want to get a little bit in front of the pivots, both on entries and exits. Okay? I use a rule of thumb for the Dow of 3 points. All right, so let's do a pop quiz. If the Dow's currently trading at 10,006, and I want to buy the pivot below, and the pivot below is 99.95, where am I going to place my entry? Where am I going to place my limit order? Right. Does that make sense to everyone? Yep. On the other side of the coin, if there's a pivot at 10,238 and the market's rallying up to that level and I want to short it, what's my limit order? What is it?
Well, what's the number?
Okay, nobody else can answer. The pivot's at 10,238. We're rallying up to that level and I want to short. Where do I put my short order?
3 points below.
Which is?
Below. 46.
Close, yeah. Well, yeah, I just want to make sure you got it because, all right, and you can do this on the Russell, the NASDAQ, the S&P, and so on. All right, what I'm going to do is I'm just going to go to the charts that I actually use because it's just going to show you more tools that I use. Now, so that's the basic pivots. Now, I don't use pivots without scalper buys and sells and the TTM trend. So now what I'm going to do is I want to go in and show you guys the entire chart that I use for day trading. It's going to show the squeeze, the pivots, the scalper buys and sells, and the TTM trend and all that stuff. So first I just want to make sure you guys understand scalper buys and sells, and then we're going to go through all these different charts in detail. How many people here are familiar with the scalper buys and sells? So a few of you, okay. What the scalper buys and sells are, it's just a way to mark potential pivot highs or pivot lows in the market. Okay. Now what defines a pivot high or a pivot low? On any time frame, if you can get 3 higher closes in a row, okay, that designates a potential reversal of the trend. And a high percentage of the time, it is a decent reversal of the trend. The market kind of shifts in threes. If you get 3 higher days in a row, generally the 4th day is a down day, and so on. So what the scalper buys and sells do is they try to find these pivots intraday. And by using a smaller time frame chart, like a 233 tick chart or 144 tick chart, you're actually going to be getting these turns very, very quickly. And so what will happen here is on page 202, you can see, like right here, when the market is rallying, and now we get 3 lower lows in a row, it's going to paint a white paint bar on the actual bar that started the series in the higher lows. Okay, so what this means is that the market was going, now it's coming down. We get a lower close, and the paint bar that's painted is the first bar in the series of 3 lower closes in a row. Okay, does that make sense? It's kind of, I mean, sometimes it's like a little confusing, but I just want to make sure you guys understand.
Close to close.
Right. It's not. It doesn't mean that intra-bar it went lower. It means it closed lower, and that's important. So same thing here. What happened is we came down here, we bottomed, we made a higher high, boom. Once this 3rd bar closes, it paints it. So what I do on this too is you can set up an audio alert. So when you get the paint bar, the audio alert will tell you that a reversal in the market just took place. Okay. So visually, I really like this because then what will happen here, now the TTM trend we've already talked about, but what I've also done with this is that I used to always look at like the MACD, stochastics, and RSI on a chart, and you'd sit there and just to see if they're turning higher or lower, and then it just got tiring trying to watch all those. So now what happens is these dots, like if it's a blue dot here, that means the stochastics, the MACD, and the RSI are all turning higher. Okay, so boom, you get into a trade. This designates that it's a turn. You know, you're not going to get in right there. If you wait for the signal, you're going to get in about right there. And then you can just stay in the trade until you get a reversal signal. So the reversal is, the confirmation here is you get the reversal bottom and a blue dot. Because the blue dot is now confirming that it's actually turning higher. You've got the MACD, the stochastics, and all the oscillators turning higher. Okay? and then to get out is just the reversal. So how I use this with pivots is I ignore signals that don't take place against a pivot level. Okay, these kind of are in no man's land. So this thing right here, I wouldn't take. But this thing right here, no. This thing right here, no. But now here, price actually touched the pivot level, so that's one that's worth taking. And on something like this, you can sit here and peel off half at this pivot level, and then just either take the rest off at this pivot or stay in until you get a reversal signal. Okay? I've got some more examples of these, but any questions on how that works?
Actually, just the entries. Like, since it is 3 bars delay before the scalper paints the bar, a lot of times you're going to be in between pivots. Are you running a market order right then to go short?
No, that's a good question on the entries. Now here, this is what I do, okay? On a play like this, I'm going to be getting into the market on the sell-off to the pivot. Okay, so I'm actually getting in before the signal fires off.
Cheater. Say it again. That's illegal.
But now there's times when I wait, which I'll tell you about. But if I'm sitting there and it's a choppy market, okay, all the trends going sideways, the ticks are not doing any extremes. It's a sideways market. I'm going to fade the move to the pivots. All right. So what's going to happen, like in a situation like this, we come down to a pivot level. I've already got my limit order in. What I want to see is shortly thereafter is that we get the white pivot paint bar. Now it's confirming that the trade's working out. Now, if you're not sure, and this is kind of the main reason I use this, if there are times when you're not sure if this is going to work out or not, you can wait. Okay? Like right here. The market just blew through this. Are you going to fade this move? If you're not sure, it's like, wow, the market's really taken off here. You can just wait. And so in this case, like right here, if it does finally break, well, this one wasn't against a pivot level. It was too high. So I ignore that one. It pulls back. Then you get one right at that level, and you can take it. Yes?
First time I've ever seen these little white bars. Can you just explain what that consists of again?
Yep.
You said 5?
Yeah, let me find another. I've got some other charts.
2
here.
parts fairy dust and 1 part troll.
You do it only on 233 tick charts or 5 minute charts? Only 2?
2 parts fairy dust and 1 part troll.
Yeah. How it works, and this is actually, I got some examples here that'll show you how the fairy dust troll mixes together. You can do this on different time frames, okay? So now here's the scalper, the indicator that you were just talking about without anything else on it, just so it's very clear how it works. What happens here, and you can actually use this just by itself, but what happens here is like, okay, here the bar, you can see the bar closes right there. You can see the little bar sticking out. And then you get a higher close, and then you got a higher close. So you've got 3 series of higher closes. Once this bar closes, then this bar paints. Okay? So what it's telling you is that this bar just marked a pivot point. So now you can stay in the trade until it generates another reversal. So here you can see we got higher high, higher high, higher high. Now these 3 don't generate one because it's not a reversal. It's in the direction. Okay? So da-da-da-da-da. And then it will get higher high, higher high, oh, higher, higher high, higher high, higher high, lower, but now we got higher, lower, higher, higher. So now we get lower, lower, lower. Once you get 3 in the opposite direction of the prevailing trend, boom, now you get your bar. So in this particular case, you're going to get in here at point number 2, which is 1133.25, and you're going to get out here, which is 1138.50, which was 5 1/4 points on the S&Ps. So all this is it's because when I did a lot of swing plays, I always liked the 3-bar reversal. That was something that was always, to me, I could see that it worked on all time frames. So I just wanted to see if it would work with scalping as well, and I found like on the 233 tick chart it worked really, really well. I did find for a while that there was some noise and I'd get chopped in and out. Then when I overlaid that with the pivots, it was a nice mix because that filtered out the ones that I didn't want to take.
Yeah, when looking at choppy markets, I noticed as soon as you get your confirmation to buy, all of a sudden it'll reverse. So you're left-handed.
Yeah, I'll show you how I use it in those. Another question?
So I have a triangle instead of a white box.
You have e-signal. E-signal's a triangle, TradeStation's a white bar. I don't know why the difference is.
So only in 233 charts, tick bars charts.
For day trading, I like to use the 233 tick chart. Because if you use a 5-minute chart, it's going to signal 15 minutes later. So it's kind of late. But I'll show you some more examples of just this. So here's another 233 tick chart. Okay, so here we are, get a close, higher close, higher close. We paint this bar. So you're going to be getting in here, right? And then you just stay in it until you get 3 lower closes in a row. Now here you get lower close, but it goes higher, higher. And now that's the same, so that's not lower. And then we get here, and then lower. When then you get that lower, lower, boom, it paints. That was like a point in the quarter. So again, it's just reversals based on the underlying activity. Now you can use larger time frames, and it can pick up. The 5 minutes a little clunkier. I was looking for some examples on a 5-minute just to see, but I don't really like the 5-minute. But you can see here it's the same thing. You get a close, higher close, higher close. It paints the bar. Stay until you get a reversal, and it's right there. Now, the other thing I want to show you guys, you can use this on other time frames. Now here's a 60-minute chart. Higher close, paints the bar. You just stay in until you get a reversal. Lower close, and you're out. So it's a good way to kind of catch market turns, which is what I'm looking for. The reason I like this is that I'm looking for markets that have been trending hard in one direction. I'm trying to pick up a reversal. Okay, I'm not a big fan of catching a falling knife or standing in front of a freight train. All right, if the market's falling hard, I want to see some indication that it possibly might be turning, not just because it's oversold, okay, or not because it's come down so far. I want to see something specific, and to me, something specific is a series of 3 higher closes. That shows me that at least they're going to give it a shot. So in a situation like this, all you got to do is, boom, you get in here, and guess where your stop is? Your stop is at the low of the signal bar. So in this case, you're risking 6 points. It's pretty cut and dry, and it's a pretty low-risk trade.
How do you relate that to the squeeze?
It's really a separate setup, but I'm going to show you, like on the tick charts, how you can use it with the squeeze, because I tie them all in together.
Now, what does it mean when you get 3 bars side by side on a scalpel bar?
3 bars side by side.
Scalpel bars, all 3 lined up.
Like where?
Like where point 1 is. Sometimes I'll see 3 of them show up at one time.
3 of these?
Yeah.
You mean right next to each other? Yeah. Oh, it's usually when things are real choppy. I mean, you're going to get higher, high, higher, high, lower, low, lower, low, and I'll show you some examples of that too. And this works on a daily chart here too. So you can see you got close, lower close, paint the bar that fired off. So you just go short, put a stop above the high of the signal bar, and then you just stay in until you get a reversal. Okay. What's nice here, and look here, you get like right here. It's like, let's see, where is the reversal, reversal, reversal. Boom, when you get the reversal now, you're not going to get out and cover on the dead lows. You're going to be getting out here when it closes above that, and you get the signal bar. But this is a good way on a daily chart to catch potential reversals. Okay? Generally, you're not going to get a reversal in a market until you get 3 lower closes in the opposite direction or 3 higher closes in the opposite direction. Okay? So there's just some more examples there. Same thing in the euro. Works in stocks. I mean, same thing. Here's KLAC, lower, low, paints the bar, goes short, put a stop, and you just stay in it until the reversal turns. That was like a 9.5 point play in CLAC. Bonds, crude oil. All right, so what I'm going to do now is I'm going to forward to these charts. Okay, so this is the exact chart that I use for day trading. All right, so at this point I want to make sure we all understand everything here. Okay, we've gone over the pivots, right? So you guys understand how those are created and how those get there. We've gone over the squeeze. All right, so you guys understand how that works.
You have to put all these pivots in by hand manually?
I used to, and it used to take me about half an hour every morning, which kind of was good because you definitely remembered.
There's nothing good about putting those things in for half an hour.
What'll happen, how I become more efficient in my trading is Hubert will sit there and watch me for 30 minutes and just go, "Mother of God, son." And so he'll sit there and then create a software program to help me out.
It's how you change time frames on TradeStation. You go click, click, 3. You do like 3 times. I'm like, dude, there's a button right there.
Habits.
I know.
Hard to break. So one morning when Hubert's watching me line up all my pivots, he's just like, God. And what I do now is these pivots right here, what happens is I just right-click on TradeStation. These pivots are actually an indicator now, and I can just right-click on it, enter in the high-low close, I'm done, and then it draws all the pivots and it labels them for me, so I know exactly where they are. It also makes all the daily ones yellow, the weekly ones blue, and the midpoints white, and the monthly ones purple. So now it just takes a second, and they're labeled, and it does. Anytime Hubert can make my life easier, I will admit and thank him, and that was one of the cases that did happen.
Actually, the story was we were in California, and he's like, "Here, I got to do my newsletter. Go ahead and draw those pivot lines." In.
Right. That's right. I forgot.
And I did it one time, and I said, "We are never ever taking 45 minutes to draw pivot lines in." I was like, "That's crazy."
To me, it was a good warm up for the trading.
That
day.
is nuts right there. I just like no.
Yeah, we have these for e-signal too.
Same daily?
Yep.
Great, good guys.
Gilbert, you made me spend 3 hours drawing Fibonacci.
Yeah, but
right, I remember that.
But then I showed you an easier way to do it too.
And the thing about it is after you do it the hard way, then you really appreciate the easy way. Let's see. Now, so we just went over the scalper buy. So you guys understand how the white bars are painted now, okay? You understand the TTM trend, why it's red or why it's blue. That's the Heineken thing. Hakanashi. And you understand the blue dots and red dots. We didn't go over that too much. Is there any of this part of this chart that nobody understands?
Blue dots and red dots are the MACD and stochastics.
Yeah. So if they're turning up higher, they're blue, and if they're turning lower into a cell, they're red. All three. Okay. Yep. So these blue dots here. This is part of the scalper buys and sells, which is the white. I used to look at charts that have the MACD, stochastic, and the RSI, and I'd wait for them all to turn higher to confirm a move. So instead of watching those, now what happens is when they do turn higher, TradeStation will paint a blue dot.
What about e-signal? Nothing.
It does. What does it do on e-signal?
Same thing.
Is it a blue dot?
Are you able to change the internals of the stochastics or
No. If you want to do that,
yeah.
I will turn you on to the programmers that did it for us. They'll change it and then lock it back up.
They don't give you variables though?
Oh, wait a minute.
I don't think.
Hold on. Their inputs on it, aren't they?
I said they could put some in.
Yeah, they could.
I'm not sure. I'll have to check.
I believe the way it is right now, it's defaulted. If you really want to change it to something specific, let us know, and we can. I think you can.
Change it. Well, can I ask a question? To do programming, I'm sure everybody in here has certain things they'd like to get programmed from time to time, and you're traders, but e-signal or TradeStation, do they charge a lot of money?
No. Here's the thing. There are very few good programmers. There are plenty of programmers, but the majority of them suck. Or we'll tell you, yeah, I can have it done for you in 2 days. And then by next December, you will have it.
Okay.
But I've got a handful of guys I deal with on TradeStation and or eSignal. For some of these indicators here, they'll charge anywhere from $300 to $400 a pop for them. We end up charging about what it would cost you to go find a good programmer and program them up.
The knowledge of just trading, I mean, we do health insurance processing, and our programmers couldn't even start on this stuff.
Right. So yeah, I mean, if you've got a good programmer that can turn around an indicator pretty quick, the hardest ones to find is a good e-signal programmer. To tell you the truth.
Yeah.
But there's a lot of good TradeStation guys.
Do you guys use the guy that makes all the ones, Chris? For e-signal?
I do use Chris for e-signal.
Yeah,
yes.
he's good.
Yeah, he's good. He's a good guy.
Those two red dots over the uptrend, is that like a heads up that's going to roll over?
Yeah, no, that's a good question. Okay, first let me make sure everybody understands everything on this chart, right? If you don't, just ask now.
Well, the dot includes the stochastic and the MACD?
Yes.
Okay.
And the RSI?
Yes.
And the RSI.
So when they're all turning over, like into a cell, then it's just going to put a red dot on there.
Okay. Does it say that anywhere in your writing?
I think it says it at the beginning of the scalper buy and sell section.
And it won't turn red unless they all turn.
They all have to be in unison? Is that what you're saying?
Right.
And then
John, do they just have to take this direction, or there's a certain parameter in each one of those which you use as a threshold?
Sure, as an example, okay, if you're going to get a blue dot, that means the stochastic has to come back through 20. The MACD lines have to cross up again. They don't have to be above 0. They just have to cross up higher. And the RSI has to be up above 30. I think. Yeah, it should be 30 because I use 30 and 70 for RSI.
So if they're not in unison, nothing appears.
Correct. You know, actually, here's what I want to do with this because we've got just a few minutes left on this tape, so we're going to take a break. So what I'm going to do is we'll take a break here, and then we're going to come back with this chart, but then I'm also going to boot up my trade station so we can look at today's live data too with this chart. All right? So let's, cool. So why don't we do this? Let's go ahead. We're going to take a break here for about 10 minutes, and we'll come back and finish this section up.